Hello, welcome back to WINFXTRADING YouTube channel, the only channel that has been optimized to make you rich trading the Forex synthetic market. If this is your first time of visiting this YouTube channel, do your best to subscribe and turn on the bell notifications so you get notified each time I upload a new content. Try to like and refer your network to this channel so that YouTube will push us to a high level of audience. In today's topic, we shall be considering BoomCrash Indices as store of value. BoomCrash Indices as store of value. Okay, this is a very scarce topic. Nobody is talking about this, but by the time you watch this video to the end, you will learn a lot about this. So you can use BoomCrash as a safe haven only if you can predict the default direction, not necessarily the spike direction, but the default direction. I'm going to tell you the reason why it is like that. When I go to the chart, you see everything clearly. Right now, this is crash 300. You see that a crash market like BoomCrash market, they have two type of movement. Number one is direction, the default direction movement, and number two is the spike movement. So if you want to use BoomCrash market as a store of value, you will basically position to trade the direction, the default direction. So you have to study the trend of the market and be able to wait. You have to pay attention to the word wait. You have to wait. You have to patiently wait for the default direction signal to exist. When it exists, the market is going to fluctuate between negative and positive, but towards the end of the contract, towards the end of the investment, or towards the time you wanna exchange your value back into physical cash, that your money must have appreciated maybe by 3 times, 4 times, 5 times, 10 times, depending on the strength of the signal. Okay, so to use BoomCrash market as a store of value, you definitely need the monthly or yearly time frame analysis. Actually, the signal must come from the monthly or yearly time frame, but here we don't have a yearly time frame on MT5, so I will work this on the monthly time frame. Okay, identify areas of opportunity, identify trends in the market. From this monthly perspective, you really need to identify areas of opportunity and trends. What I mean by areas of opportunity are support, resistance, supply, or demand. Okay, so in the first place, this low was taken out, so the market has been confirmed a downtrend. Had it been price came here and then get rejected and started pushing up, then we will say that the market is still in uptrend. But right here, crash 300 is what? Still in downtrend. Okay, so you cannot use it as a store of value in this condition, because if you buy, basically you will buy crash market and you will sell boom market if you want to use them as store of value. But what is happening here is that you are not going to buy in this condition simply because the market is on a strong resistance and the market is in a downtrend. So a strong resistance plus a downtrend characteristics means a very strong selling pressure. So there's no way you can just come and say you are going to buy as a store of value because This support here is a breakable support. Why? Because the market is in a downtrend, hence every low is subject to breakout. Like every low is breakable. The probability of breaking every low in a downtrend is 100%, meaning it is certain. The certainty is 100%. Okay, so if you now buy here and you want to wait for a couple of months or a couple of years and then this market break out of this support, you will basically, your money will depreciate. Though in advanced aspect of this topic, I can just use I can actually use boom and crash market as a store of value, whether trading the spike or trading the direction. But in order to simplify things, in order to make it, because at that level it's going to be more complicated, so in order to make things so simple, for practicals and for application, then I have to consider only default direction. That is where patience comes in. You need to be patient because it might take you several weeks, several days, several weeks, several months, several couple of years, maybe 1 to 2 years for you to get a rare opportunity. Okay, so when we have this area and you see what price is doing, here, we have look at what price is doing here. So if you look at this line, the slope of this line is what is very important. The rate of change of this line with respect to time is basically negative. So this line is sloping negative, meaning that there is probability that price will come and test this line like after some time. It will come and test this line, meaning that we cannot buy because it still have probability to go down. So we can only get a signal for store of value. We can only use boom and crash market for store of value if there is alignment of trend with our direction. So if you are trying to use cash market as a store of value, then the market must be trending upwards in the monthly time frame. That is it. And if you want to use boom market as a store of value, then the market must be trending downwards in the monthly time frame. Okay, so the next thing we are going to consider is, how do we know, because if you want to use boom and crash market as a store of value, you are actually risking 100% of your capital. So this is not where you risk 10% or less, or you must risk 100% because it is going to be used as a store of value. So if something is used as a store of value, it means that when you modulate that stuff with your physical cash, your physical cash will appreciate over time. It will not, even if it fluctuates, even if it draws down, in the long term, by the time it reach the maturity period where you can now cash out or withdraw your money into a physical cash for exchange, for spending, you discover that it has appreciated 2 times, 3 times, 4 times, 10 times or more of the original value. That is what I mean by store of value. You can't just say you want to use boom and crash as a store of value and you put $100,000, and after 2 years or after some months or after some weeks, you are not seeing your capital depreciated to $30,000. It is no longer a store of value, rather it is a kind of value killer. Okay, so what I want to bring here is how do we actually, as given a capital, given a capital that you want to store, how do you actually run the transaction? That is where the lot size analysis calculation comes in, because you have to use the right lot size for this to work. So if cash 300 can break out of this zone, this resistance, and create a higher low for us, actually if it break out of this resistance, definitely we will have this as a low, okay, but not necessarily a higher low, but this is a low. If this is a low, then we expect, maybe using Fibonacci retracement tool, we expect another low somewhere here. If that happens, what it means is cash 300 will do something like this and then spike up as much as it can for a couple of months, years. You know, like you have to calculate during the bear market, which we cannot even use to store value because it is actually spike direction. During those periods, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 24, 25, 26, 27. So, 27 is 24 plus 3. So, that is 2 years and 3 months. 2 years and 3 months, the market has, is depreciating. It's actually depreciating your, assuming you traded your bots, because when you actually try to store your money so that you will have value in future, the general term to use is a kind of buying. You are buying, but that buy have polarity. For cash market, it is a definite buy. For boom market, it is a definite sell, because you want to follow the direction. Okay, so if this stuff happen like this and it retraces maybe to a fib level of 38 or between 38 and 50%, and then we are going to buy. We are going to buy cash 300, and then we hold it. We will hold it long term until it reaches a level where it decides to start making lower lows and lower highs, which is change of trend. Okay. Now, how do we actually navigate this? Given that you have $100,000, but you want to store this $100,000, you want to store it so that it appreciates with time. How do you do that? Now, look at what you are going to do. You are going to come here. First of all, we assume that the low is here, right? So if the low is here, that means we are entering at that low, meaning that because every low we create a high, meaning that if you enter a market at a valid low, if that low is definite, if that low is correct, meaning that if price reach there, it's not going to continue going against that low. The rate of change of price with time at that point is 0. Okay, meaning that the market will reverse from there. So what you need is to protect your capital. What you need is to convert your money as a store of value. Is to make sure your money is stored properly without liquidation. So how do you do this? You will not use the last low. Very important, last low. Okay, because you have to be monitoring the market. You want to enter the move when it is about to start, when it is fresh. So when you measure this low, this is 1,631, then you multiply it by 2. That is doubling effect. You want to increase the margin so that the capital will have room to fluctuate and finally take on to I finally appreciate with time in the long term. So when you do this, you have over 3,200. Now I'm going to take you to a calculator to show you the lot size you are going to use. Right now you have $100,000, and then we have calculated the stop loss pips as 3,200. You are going to divide this 100,000 by 3,200. That is power of crash market, because this is the power of boom and crash market, because you are trading the default direction. The market will just fluctuate against you and then boom, go to the default direction. Okay, so we'll be trading trade loss size. Like, no matter, once we are entering this market here because we believe it's gonna go. Okay, now when we enter here and then the market start flying and reach here, that is 16,000 pips. We have 16,000 pips, so we have 16,000 pips. This is the gain, this is the profit pips. So if you multiply this by 3, you have made, like, your capital have appreciated by $48,000, maybe in a couple of a year, or in a couple of some months, or in a couple of 2 years. Okay, because you really want to store this as a value. So the only thing you need to do is to monitor when the trend will change. Okay, is to monitor when the trend is changed. Okay, and it should be in the monthly time frame. Okay, so if you have big equity, if you have big capital, and you want me to run a store of value for you using boom and crash market on a contract base and commission base, then you have to DM me on Telegram. I'll walk you through, I'll find the right boom and crash asset and make sure your goal is attained. Okay, so that's pretty much cool. Let me check what is the duration. The video is almost 17 minutes. I'm going to check boom market and we'll conclude. Okay, right now this is boom 500. Okay, so we are looking for sell. Like, for we to store our capital using a boom market, we must sell our capital. We have to sell our capital, right? So, like, we have to sell boom market with our capital. So what we need is to select the right boom market that will meet our direction. We are going to trade the default direction, so we'll be selling. So for that sell to work, we need a downtrend. So we have a break of structure here. So this is a matter of timing. We have a break of structure here. So because we have a break of structure here like this, the market is basically downtrend. All you need to do is to enter the trade and put your SL at the last swing. Okay, very important. Like, you put it about the last swing from left. So this is the last swing. So when you put it, we have over 2,000 pips. Okay, so these 2,000 pips, let's assume we want to store $100,000. Once again. So what are we going to do? I'm going to take you to the calculator. Right here, we have $100,000. You can store more than this. Okay, so you have this and then you divide by 2,000. Okay, the belief is that the market is not, see, even if there is nothing like putting stop loss, you don't actually put stop loss, you just calculate the loss size. The thing is, if the market tends to depreciate more than 50%, You can decide to withdraw the remaining 50% of your capital. The reason is because in the field of investment, there is even if I have validated that this is a store of value, the truth is that in investment, even though for instance gold is safe haven, the truth is that the political system, the financial crisis, there are some reasons in the economy that can make gold drop by 50% of the current price. So those that have been buying goods as a store of value, their money will basically depreciate, if not lost or liquidate. So even though I have hyped this, you can still apply some risk management. Anything that has to do with trading, you almost, even if it is 100% sure, you still need to apply risk management, because fundamentals or market makers, brokers can decide to do whatever they wish to do. Okay, so that's cool. So we have 50 lot size, and basically this 50 lot size, if you were able to use this asset to store your $100,000, let's assume you start storing it at this price, and then when you get to this price, you have gained over 5,000 pips. When you have this, remember the lot size, 50 by 5,000, there is a gain of $250,000, right? When you add it to your $100,000, you have $350,000. Basically, this is just crazy. No trading. You are not trading. You just invest, long-term investment. But you did it after a clear direction, after making a serious decision, after verifying that this thing gonna work. Okay, so if you are ready for this store of value, because in a short time, in no distant time, I will, that will be a boom and crash asset that will present store of value that will be used for store of value. I'm suspecting crash 300 to be that, but the entry is where you are going to have problem, and the lot size analysis calculations. So if you are ready for this, make sure you DM me. Make sure you have at least $100,000 for this to work. Make sure you have $100,000 in your brokerage account, your broker's account, which is definitely the RIF, and I'm going to walk you through, but it should be on a contract and commission base. That's good. Make sure you keep coming. Make sure you stick to our channel. Try as much as you can to be proactive and prioritize your time as a trader by leveraging the effort of experts. Basically, the leverage you can take from us, we have VIP signal services, different categories depending on whatever you trade, and we have mentorships, and then we have courses. Mentorship and course is basically different. A course will last for a month, but mentorship is like for more than a year, depending on the kind of package you select. You can be mentored for more than a year. You can be mentored up to a year. All of this is a kind of discipleship whereby a trader is trying to transform you and transfer his powers and abilities into you, so that you actually know what you are doing. Okay, the words of a mentor is very powerful because they are more metaphysical, and prioritize your time, prioritize your energy, prioritize your dream, What it is either you enroll for our course, or you enroll for mentorship, or you join our VIP signal service. You see, all is separating everything, meaning that there's no compulsion to just do everything. Just one thing can change your life. Bye for now.